So before we get started, check out the following links in the description box below as highlighted in the image shown. So you'll be able to get our past papers, our link to our official website, link to accreditations, our link to donation page, and contact details in the description. So once you'll be watching a certain video of any lesson or of any past paper, you'll be able to get all these links, and you can be able to get to download past papers, to reach to our official website. You'll be able to see links to our accreditations so that you can see which authorities have accredited us. You'll be able to reach to our donation page as well as our contact details.
So welcome class. We'll, this session we'll look at question 31 to question 40. And let's start. So an increase in the allowance for doubtful debts will result in an increase in the allowance for doubtful debt will result in allowance for doubtful debt will result in 1, an increase in liability, a decrease in net profit. Yeah, this is correct. B is correct. A decrease in working capital, an increase in sales returns. The most obvious answer here, given the options, of course it results in so many things, but the most obvious answer here that we have in this question is B. An increase in allowance for doubtful debts, because it's treated as a loss, and losses are, they will appear in the profit and loss in the debit side. So it will definitely lead to a decrease in net profit. So let's just go for B without thinking about these others, which will just complicate. This one is very obvious. An increase in allowance leads to a decrease in net profit. A decrease in allowance for doubtful debts will lead to an increase in profit because it's treated as a gain. So this one is treated as a loss to the business, so it will definitely lead to a decrease in net profit. So that is the correct answer. I don't know if you have understood. Gross profit, normally we have gross profit here, then we less expenses and losses in the P&L account, expenses and losses. That's where we will find an increase in doubtful debts. So if we have it here, it means that it will increase the expenses, and that will have the effect of reducing the net profit. It's among the expenses here. So the total will reduce the gross profit. Actually, the total here will be deducted from the gross profit, which will have the effect of, reducing the net profit. So that's what we are talking about. So B is very much correct. Which one of the following accounts maintains the record of each partner's stake in the partnership business? Which one of the following accounts maintains the record of each partner's stake in the partnership business? We either talk of capital account or current account. These are the two records that show the partner's stake in the partnership business. Capital account long-term, current account short-term on a yearly basis. So now, do we have any here? Definitely, we already have current account, so we have it, and current account takes the day. So current account will be used to record each of the partners' stake in a partnership business. Thank you. Appropriation account is just used to show the distribution of the net profit to the partners. So the right account that we're talking about here is C. The correct answer is C. Use the following information to answer questions 33 to 35. The table below shows the ledger balance for Tetemeka Enterprises as at 31st Dec 2023. There we go. Given that the gross profit was 80,000 and closing inventory as at 31st Dec 2023 was 45,000. Calculate the opening inventory Y as at 1st January 2023. Opening inventory. So this is a straightforward question. Don't see anything hard in this. Gross profit is 80,000. Closing inventory is 45,000. Opening inventory. So how do we calculate opening inventory? Sales, have we been given the sales? Sales is for 50,000. Then of course we have opening stock, which is now the unknown. Purchases is 325,000. Do you have any workings on purchases like sales? Sales has workings. So let's just redo this. So sales is for 50,000. Then sales returns is 25,000. So the net sales is 425,000. And do we have also purchase returns or carriage inwards? Those will be workings for purchases. We don't have any of them, so it's okay. So this 425,000, opening stock, it's the unknown. That's what we are finding. Purchases is 325,000, and we don't have any workings on it. Closing stock, normally we say opening stock plus purchases minus closing stock. This is the cost of sales. Opening stock plus purchases minus closing stock. And we've been given the closing stock. So the closing stock is, that is closing inventory is 45,000. So closing stock is 45,000. And normally we less the closing stock. So what we get from here is the cost of sales. It will come here. And then this net sales minus cost of sales, we are supposed to get what we call gross profit. And I think we've been given the gross profit. Gross profit is 80,000. So we'll work upwards. Gross profit is 80,000. So that's what we are talking about. I think that makes it easier. Now, how do we find this? This is X. This is simply this minus this. 425 minus 80, because 80,000 is a result of 425 minus this X, we get 80,000. So what's this figure? 425,000 minus X is equals to 80,000. So what is X? X comes this side, so we'll have 425,000. X goes to that side, it becomes positive. 80,000 comes this side, it becomes negative, minus 80,000. So X is equals to 345,000. So this figure here is 345,000. 345,000. That is the cost of sales. So 425 minus 345 is equals to 80,000. So if this is 345, what is this figure here? What is this figure here? So this is the unknown. Now let me just delete this, because now we already know this. So let me delete this. So X plus, because this is plus, and this one if we less it as 280. 325 minus 45 is 280,000 is equals to negative 345,000. Not negative, it's 345,000. We have just put the negative because we are reducing it from the net sales. But otherwise, cost of sales is 345,000, not negative 345,000. So X will be equal to 345,000 minus, this goes the other side, 280,000. So X is equals to, there's a mistake somewhere, sorry. This is 325,500. Just checked, I was lucky. 325,500. Yeah. So that throws us back to the drawing board. Let's just start again. So this is 325,500. 325,500 minus 45,000. That is 280,500. So X plus 280,500 is equals to this 345,000. So X is equals to 345,000 minus 280,500. So X is equals to minus 345,000, 64,500. So this opening stock is 64,500. And if you add now this plus this minus this, yeah, you get this. So opening stock is equal to 64,500. So this is 64,500. So let's check 64,500. I think we have it. Yeah, there we go. So 64,500. There we go. That is the correct answer. Then calculate the opening capital Z as at 1st January 2023. Calculate the opening capital Z as at 1st January 2023. Calculate the opening capital. So this one, just get the totals. So straightforward question. Get the total, add the debits and credits. So this is 445,000 plus 60,000. Let's restrict the zeros. So 445 plus 60 plus 64.5 plus 29.5 plus 325.5 plus 25 plus 45.5. That gives us 595. Is it? It can't be 595. I think I must have added wrongly. Let me just repeat. 445 plus 60 plus 64.5 plus 29.5 plus 325.5 plus 25 plus 45.5. This gives us 995. So 995,000. Then the other side, because these are balancing figure, and of course we have the unknown on the credit side, so 995,000 will be a balancing figure. So what is missing? 31.5 plus 5 plus 150 plus 450, that is 600, is equal to 636.5 minus 995, 358.5, 358,500. So this is 358,500. That is Z. So we simply come here and say Z is 358,500. So that is the figure that we are looking for. Thank you. 358,500. So then let's proceed to the next question. That is question 36. Use the following information to answer question 36 to question 38. Question 36 to question 38. A machine which cost 3 million was acquired on 1st July 2019. 1st July 2019. It is depreciated at a rate of 15% per annum on a straight line basis. Full depreciation is provided in the year of acquisition and no depreciation is charged in the year of disposal. Determine the net book value of the machine to be shown in the statement of financial statement as at 31st December 2023. Quite straightforward. Determine the net book value of the machine to be shown in the statement of financial as at 31st December 2023. It was bought on 1st July 2019 at 3 million and it depreciates at the rate of 15% per annum. This is straight line. Straight line is straightforward. So we just say 0.15 times 3,000. That gives us 450. It means every year it depreciates by 450,000. Straight line doesn't change, so it's a straightforward thing. So what you need to do is just calculate the number of years. We multiply by this figure for 50,000. Then we less from this, and we get the value of the asset at the end of 2023. So now this is 2019. We are going to consider that because we have been told that full depreciation is provided in the year of acquisition, and it was acquired in July 2019. So we'll just assume and we provide for depreciation the whole of that year. So 2019, it will depreciate by 450,000, of course. 2020, it will depreciate by 450 because it's straight line. 2021, it will depreciate by 450. 2022, it will depreciate by 450. Now, let's continue. A machine one, this was acquired in 1st July. It's depreciated at 15% straight line. Full depreciation is provided. Okay. Determine the net book value of the machine to be shown in the statement of financial position as at 31st December 2023. So again, 2023, full depreciation at 450. So this is 450 times 5. That gives us 2250. So total depreciation for the 5 years is 2250. Now the question is asking, what is the net book value of the machine after, at the end of the 5th year? So this will be 3 million, which is its value, 3 million, which is its value, minus the 2250, the total depreciation figure, which gives us 750,000 as being the value of the asset as at that 1st December 2023. So this is the depreciation for the 5 years. Every year, the depreciation will be for 50,000, which is simply a percentage of the total, the cost of the machine, because we are working with the straight line method. Straight line method, the depreciation doesn't change with the changing years. It remains constant over the years. And that's why we've worked 2019, 2020, 2021, 2022, and 2023. Total depreciation 2250. If we less that from the value of the asset, we remain with 750, and that's the remaining value as at that 1st Dec 2023. Is it part of the answers? Yes, it is. So A is the correct answer for that question. Let's move to the next question. Let's move to the next question. We move to the next question. Question 37. Calculate the depreciation expense to be charged in the profit or loss account for the year ended at 1st December if the reducing balance method was used. Wow. If the reducing balance method was used. So let's compute it. Let's create some space. So 2019, the value is 3 million. If depreciation for 2019 reducing balance method 15%, it will be 0.15 times 3 million. 0.15 times 3 million. This will give us 450,000. That is depreciation for the year 2019. So the remaining balance will be 2,550,000. That is end of 2019. Now 2020, again, will depreciate by 15% off. Sorry. Let me show you how it will go. In 2019, it will be 15% off 3 million. So in 2020, it will be 15% off 2,550. That's how it goes. 15% of 2,550. That is the reducing balance. We pick up from the balance of the previous year. So 15% of 2,550. So that will be 0.15 times 2,550. This gives us 382.5. 382,500. That will be the depreciation for 2020. So by the end of 2020, the balance will be 2,550 minus 382.5. This will give us 2167,500. That will be closing balance, 2167,500. Now let's go back to the question. I think we have answered the question. Calculate the depreciation expense to be charged in the profit and loss account for the year ended at 1st December 2020 if the reducing balance method was used. So the depreciation to be charged is this, 382,500, 382,500. This is the remaining balance after we've charged depreciation for 2020. This will be the depreciation for 2019. This is the depreciation for 2020. 2020. So the closing balance by the end of 2020 will be this, but the depreciation for 2020 will be 382,500. So we come here, we have it here. This is D. So that is the answer. Then let's come to the next question. Determine the gain or loss if the machinery was disposed of on 1st December 2023 at a price of 650,000 under the reducing balance method. Wow, this is a heavy task. Oh God. So we have to calculate reducing balance up to 2023. Let's start. Let's just proceed. I think we pick up from here. This will be good enough. So let's pick up from there. Aha. So in the year 2021, it will be 15% of this one, 2167.5. So that is the depreciation of 2021. So 0.15 times 2167.5. This gives us 325,125. That is the depreciation for 2021. And you can see it now follows the name. Remember, the name is reducing balance. You can see how the balances are going, 0.5. So this gives us 1842,375. So then we come to 2022, again 15% of 18.375. Percent will retain the 15% of the new balance, as we move on. So 15% of that times 0.15, that gives us 276,356. So that is the depreciation for 2022. So plus 1842,375. So the answer is, looks like I've messed this thing up. So it's 1842,375 minus 276,356. So 1566,019. So this is end of 2022. Now we've got 2023. Wait a minute, 2023 there was something about the year of disposal. Full depreciation is provided in the year of acquisition, but no depreciation is charged in the year of disposal. When was it disposed? 1st December 2023. No disposal, no depreciation is charged in the year of disposal. Wow. So this is the year of disposal, no depreciation will be charged, despite the fact that we are almost coming the end of the year, but the instruction is very clear that no depreciation is charged in the year of disposal. So we are not going to compute the depreciation. So then, determine the gain or loss if the machinery was disposed on 1st December at a price of 650,000 under the reducing balance method. What? This thing was disposed at 650,000, yet its value, book value, is 1566,019. It means if we were to dispose it, we were supposed to dispose it at this figure. That is the value as at, that time. Because in 2023, we are not going to compute depreciation. So this is the value of that vehicle. But how much was it sold at? 650. Can you imagine? That is a whooping loss. So it's a loss of how much? Because they're asking the gain or loss. It's already a loss. So 1566,019 minus 650,000. 916,019. So a loss of this minus this, which will give us 916,019. Do you have such like an answer here? A gain, a loss, a loss. This is the answer. A loss of 916,019. So that is the answer. That's straightforward. Perfect. That is the answer for question 38. Let's continue. Question 39. Which one of the following statements outlines the primary purpose of an adjusted trial balance? Which one of the following statements outlines the primary purpose of an adjusted trial balance? Adjusted trial balance is used to check if the two balance. That's all, to detect if there's any error. That's what the trial balance does. So to list all accounts and their balances after, that is what a trial balance does. But what does an adjusted trial balance do? It factors in all the adjustments that have been made. That is what an adjusted trial balance does. So to list all accounts and their balances after adjustment of entries are made, this is definitely the correct answer. To determine the net income or loss, no. This is the work of a financial statement, an income statement. To provide a detailed list of all transactions that occurred during the accounting period, no. To prepare financial statement directly from, no. So the correct answer is A, and it goes without saying. A is just the correct answer, and it goes without saying. So to list all accounts and their balances after adjustment of entries are made. Normally we have the trial balance and we have the adjusted trial balance. Adjusted trial balance takes into effect other things that are not found directly on the trial balance, like the depreciation, the closing stock, and such like stuff. Which one of the following represent? The correct answer here is A. This is a big tick. Okay. Which one of the following represent the internal users of financial information? Internal users of financial information are the users who are found within the organization. So if you are found outside the organization, you are not an internal user. Internal auditors and suppliers, no, they are outsiders. Government, no, an outsider. Trading partners, no, outsiders. Employees and management, insiders. So the correct answer is A. A represents the internal users of financial account information. So the correct answer is A. Thank you. Let's meet in the last session for questions 41 to 50. Thank you.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions. And also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.